In this lecture, we are going to take a closer look at the fractal hybrid divergence, which is an idea derived from the collision between fractal analysis, hidden divergence, and reversal divergence. The hybrid in the name of this technique is a reference to the fact that it uses a blend of two techniques that are not usually used together. The term fractal obviously means that the hybrid divergence can only be recognized with the extra layer of fractal analysis. As we studied in previous lectures, a hidden divergence signals a continuation in the overall movement of the market, which is a safer place to start our chart analysis rather than looking for price reversals. That's because trading with the overall flow of the trend is a much safer and less risky endeavor than trying to pick up the ultimate price reversals. The fractal hybrid divergence is an accurate way of catching unique momentum asymmetries in price by layering two opposite techniques together. Once again, this is only possible by using the concept of fractal analysis to find these opportunities. The fractal hybrid divergence is composed of a hidden divergence in the higher timeframe or in the higher fractal, and a reversal divergence in the lower timeframe or lower fractal. Just like the fractal reversal divergence, the hybrid divergence can appear in multiple degrees. It's worthy of noticing that only the first degree of the fractal hybrid divergence is composed of a hidden divergence. All the subsequent degrees you will be able to spot have the reversal divergence structure. Let's try to conceptualize this idea in a clearer way. The first step of spotting a fractal hybrid divergence is identifying a hidden divergence in what you are going to call the higher timeframe. Here we can use the same concept of divergent price territory that we used in the last lecture. Once you determine the divergent price territory, we can jump down to a lower timeframe to try to spot a reversal divergence inside this territory we marked in the higher timeframe. From this point on, the fractal hybrid divergence works exactly like the fractal reversal divergence. The difference lies in the beginning of the process. In other words, in the fractal reversal divergence we only use reversal divergences that repeat themselves in various degrees. In the fractal hybrid divergence, we start the analysis by identifying a hidden divergence and then we use reversal divergence in all the next degrees. As you can probably imagine, the fractal hybrid divergence is not as common as the fractal reversal divergence, which makes it an even higher probability trade idea. The moments in which this technique appears are truly one of a kind, especially if they have a logically consistent context surrounding the technique. In the next lecture, we are going to study a brand new price action technique called fractal bar that can only be derived from the study of fractal divergence. It is impossible to reach the conceptual idea of the fractal bar without understanding everything we have learned so far in the course.